So I invest for dividends and cash flow. I literally invest for dividends that come in that can pay my bills. And I have a successful channel here on YouTube, a lot of subscribers, very grateful for that, and a lot of great questions. And here in 2018, with the stock market having gone up quite a bit, I get this recurring theme of questions and this recurring theme of sentiment about being scared, about being concerned about starting out in the stock market. And I've done some videos on this in the past. In fact, one of my most popular videos here, I'll link in the description below, is about being scared. It's about starting in 2018 and how I would look at things if I were starting over again, even though I've now been investing for over 20 years. Today's video is a bit of a continuation of that. It's a look into some things that have happened in my personal life lately, and also it's really a evolution of how I look at money. It's how I look at money versus investing, versus saving, versus spending, all of these alternatives that one has with money, and why I personally think that investing in the market, even when the market has done pretty well, as long as one is conservative, as long as one is prudent, actually makes a ton of sense versus the alternatives. And so I want to go through those alternatives today and how I personally look at money. Hey everyone, thank you so much for being here. This is Ian from ppcian.com. If you are a subscriber, I really thank you for that. If you're not a subscriber yet, I please encourage you to check out my channel and consider subscribing. This is a very fast growing community here on YouTube of like-minded dividend investors, and we're all supporting each other in our journey to receive passive income from dividend-paying stocks. So today's video is an interesting one. It's not necessarily a response to any one question, but it's really a response just to a sentiment that I see on my channel around folks considering getting started, waiting, not getting started, and really weighing their alternatives. Should I save money in cash? Should I put it in stocks? Maybe should I even be spending money versus investing money right now? And so I want to talk about my personal relationship with money and some things that I have learned over the years that have really framed how I look at investing in dividend stocks and the stock market overall. And so I've got a nice chart here. I want to go through three scenarios today. The first scenario is spending. And so here we have dollars, this is kind of just a general mark of wealth, of value created. When one spends money, they're creating the least amount of value. And the reason for that is when one spends money, there are literally two classes of things that can happen. One, the thing can be a complete loss, like you just basically completely lose all of your money, or something breaks and you have to fix it. So literally when one spends money, it is taking money away. Sure, it's creating some value, it's creating some short-term gains in terms of life, in terms of enjoying life, but in general, in my opinion, it's either a complete loss or it's going to break. And so I want to give you an example just from my personal life recently. If you've been following me on Instagram, you probably know that I like shoes, and I like basketball shoes. And so these are some KD9s, Nike KD9s that I purchased a while ago. But the fact of the matter is I have a lot of basketball shoes, and so I didn't really need these shoes. I already have a bunch of shoes. I have another pair of KD9s. I have some LeBrons, I've got a bunch of Air Jordans, and so I've got a bunch of shoes. And you'll see here, these shoes are actually in reasonably good condition. Maybe I wore them 10 times or so. I mean, even if you look at the bottom, it's a little dirty, but it's still relatively clean. And I don't clean these shoes, by the way, so you can see that they're pretty much in kind of pristine condition, if you will, very good condition. Not worn that many times. And what I like about these shoes is they're very comfortable and they're pretty stylish. That being said, with kind of the green color, they don't go with everything, so you don't have that many occasions to wear them. Well, what happened is the actual air in here, there's an air pocket that goes all the way around. All the way around. That's what makes it so comfortable. Well, it popped in one of them, and so one of them, when I'm walking, it's kind of a weird sensation, like real bouncy, real springy. And so basically these are worthless at this point. I can't wear it. And what's interesting is when I read the reviews before buying these shoes, I even saw in the reviews that some other folks had this type of issue with these shoes, and I bought it anyways. I had another pair, I really like them. But the fact of the matter is this is an example of something that goes into this bucket of complete loss. I completely lost my money by spending my money on these shoes. And I didn't really need these shoes because, like I said, I have a lot of pairs of shoes. I have a lot of Air Jordans. I have all kinds of different basketball shoes. Did this one net incremental pair of shoes really need to be purchased? Probably not. I could have just make do with what I already have. And so this is kind of a fundamental lesson, even to this day, that I continue to remind myself, Ian, should you be buying this stuff, or should you be instead saving or investing that money? Because when you buy something, it may be a complete loss like this, or it may break. And so I want to go into a different example here. If you've been watching my videos for a while, you know recently, and I'll link to it in the description below, one of the challenges I faced in my own budgeting and personal financing is a fireplace in our home broke. And so that would be something that falls into the bucket of it breaks, but you've got to fix it. Now, the problem with this is it's a very expensive fix, or at least that was my perception at the time. And so I slept on it. I slept on it for a long time. I had someone out here, got their opinion. They thought it would be very expensive to fix. After sleeping on it for a number of weeks, I decided to get someone else out here, and thankfully they actually fixed it. They were able to fix it, and so and for not very much, for a reasonable price. And so the fact of the matter is, sometimes when one is buying things and they need to be fixed, they break and you need to fix it, rather than just jumping right into the fix, jumping into kind of that instant gratification. Like the first person that came out, maybe I could have said, hey, yeah, fix it. It's going to cost a ton of money, but I just want it fixed because I'm a perfectionist and I don't enjoy having something broken. And that's historically, I would say, how at least my instincts think about things. But I've learned over the years that it is important to sleep on it, to think about it, and not to jump to the first conclusion. Because again, when one is spending money, it is either going to be a complete loss or it's going to break and you need to fix it. It's not the best use of money. And so it's important when one is spending money or has to spend money to sleep on it, to think about it, to rationalize it. I'll give you another example. We have a refrigerator. The compressor recently broke. This is a refrigerator not even that old, maybe four years or so, but just out of the extended warranty, and had to get someone out here to look at it. And we had to weigh the pros and cons. Should we buy a net new refrigerator or fix it? It would have been really gratifying maybe to buy a brand new refrigerator, get it in here, be with a refrigerator again. But you know what? Instead of doing that, we thought about it, we slept on it, we thought about it. What's the right fix? We were able to get the existing refrigerator fixed. It was expensive. It was around $900 or so. But this is a very nice refrigerator. It's certainly cheaper than buying a new one of equivalent refrigerator. And it was a little bit of an inconvenience because we had to, in the short run, get a mini refrigerator. We were able to pick one up on this app called Nextdoor from a local neighbor for only $20. So that was a good deal, and now we've got it in case we ever need it again. But we had to go without a refrigerator for a few weeks because the part that they needed had to be ordered. It took forever to come in. But anyways, by sleeping on it, by thinking about it, by not jumping to the first conclusion, we were able to save money. And so this is kind of a side tangent on this overall picture today, overall relationship with money. But I do want to share that spending is probably the least effective way of using money, because like my shoes, it's either going to break or a complete loss, or it's going to break like the refrigerator or fireplace and it's need to get fixed. But if one does need to get something fixed, what I'm trying to share today is I've personally learned sleeping on it, thinking about it, not jumping to conclusions is the way to go. And I feel like a winner here on the refrigerator fix and on the fireplace fix, because both came in really, really well on the budget side of things. Anyways, that was a tangent. Let's jump into the next bucket here. So the next bucket is saving cash. There are a lot of people out there that are thinking, okay, I've got control of my finances. I'm able to save some money. Should I just save rather than putting it in the stock market? Should I just save it? And there's kind of two things that come into saving, in my opinion. One is inflation. When one saves money and just puts it in the bank account, it is slowly eroding. It is slowly losing value. And that is because of inflation. And so when one thinks they're saving money, are they really saving money? Is it really going to be the same amount of money 10 years from now because of inflation? Probably not. And so I think there's this false sense of security with saving. There's this false sense that it's in the bank, it's safe. It is in general, but it's losing value because of inflation. I think the other false sense of security with saving, and this is something I've struggled with over the years, and probably one of the reasons I've been all in the stock market. I'll link in the description below, but I've been all in dividend-paying stocks, and I typically haven't had a huge emergency fund. I haven't saved a lot. That's changing a bit in 2018 because my needs are changing. I'm evolving as an investor. I realize that the market is towards all-time highs, and so I'm changing. But at the same time, historically and even now, I've always been pretty much an all-in investor in dividend-paying stocks. And the reason for this is in bucket 2, there's a temptation to spend. And maybe there's a temptation to buy the shoes. And so to transfer money from this bucket to this bucket, and then one buys the shoes and they're a complete loss. And so that's the horrible life cycle of money. Or maybe one is really good at saving on the day-to-day. They get that money over there, but it kind of builds up. It builds up, and then all of a sudden someone is like, look, I've been working so hard all these years. I got this money saved. I want to splurge, and you know what? I'm going to go out and buy a BMW M3. Well, that's a mistake I made in my early years. I'll link in the description below. I have done a video recently on my biggest mistakes with money in the stock market, and that's another thing that can happen. But in my experience at least, when one has the money sitting around, there is a temptation. There is a huge temptation to spend. So not only is it being inflated away, but there's that temptation. And sooner or later, we're all human. Someone will give in to that temptation. At least in my experience, that's what's going to happen for me. So the third bucket, and why I am so passionate about investing for dividends, is this is the best bucket. It's the biggest for a reason. This is where the wealth is generated. This is where the money is generated. And it's for a few reasons. And this isn't just investing. This is dividend investing. And so what happens? With dividend investing, one has two benefits. They get to enjoy capital appreciation, meaning the stock price goes up over time, but also they get to enjoy dividends, which is literally checks, cash flow that comes in on a quarterly basis, typically in the United States. So one can own a world-class company like Clorox. That's an example of a company that I own. The maker of Clorox bleach, the maker of Clorox wipes. They own some other brands as well, like Burt's Bees. And so every quarter from Clorox, I receive a dividend. Now, right now, I reinvest the dividends so that it can buy additional shares of stock, but one day I won't. I'll take those dividends and I'll use them to pay bills, like for the groceries, for gasoline, for car maintenance, for whatever, my heating bill, it could be anything. And so this really is winning versus losing. I tend to look at buckets 1 and 2, spending bucket and saving bucket, as losing strategies. I tend to look, at least for myself, bucket 3 as a winning strategy. And so that's why I put winning versus losing. Now, what are some other characteristics of dividend investing that is so exciting? It is very, very passive. It's a very light strategy. Once I put my money in dividends, it will just keep working for me and I really don't have to do anything. By contrast, going over to spending and saving, spending is an active pursuit. It took me a ton of time to get the refrigerator fixed, to figure out the fireplace. Now, those are necessary things and they're just part of life, and so I can't really avoid those. But let's go into the shoes. A complete loss bucket, the shoes bucket. It takes mind share. It takes time to manage all of these shoes. And when a shoe like the one I just shared breaks, it's upsetting. It's challenging because it's a complete loss. And so this is passive. I tend to look at these buckets as a little bit more active. Even saving cash, you would think it's just in the bank doing nothing. But I would say even that temptation to spend, it's not very positive in my opinion, having a asset that's inflating away over time, plus it's sitting there creating a temptation. So I tend to look at these buckets as a little more active. Whereas dividends, it's actually growing in value and I do nothing. And so I love that it's passive. It's a really light strategy. Also, what I like about it in my personal situation is there's very little temptation to sell. If you've been watching my videos a while, I've been investing for over 20 years. You know that I invest and I never intend on selling. And why is that? One day I will live off of the dividends, but even before then, it is so motivating to have the dividends rolling in. When one starts seeing the dividend checks coming in, it's motivating, it's encouraging, and so one would never want to sell. Why would one want to sell something that is bringing in money into their household? Whereas with something like this, saving cash, it's easy to be tempted to spend because the interest rates are so low, the amount of interest that's being generated, it's just not generating any value just sitting around, whereas dividends are. And what I like about dividends is it just creates flexibility. They're cash dividends coming in, and like I said, I'm reinvesting the dividends right now, but I don't have to. Let's say tomorrow things change for me. Let's say tomorrow I want to tap into my dividends. I want to use my dividends to pay some of my bills. I can change my reinvestment option like that, very easily, and I can start spending those dividends on stuff. And so it gives me a lot of flexibility. And so the question that comes out of this that I write at the bottom of here, why are people so afraid? Why are people so afraid of losing money in the market? I don't know. I think it's a psychological thing. It's a human thing. It's a human nature thing, because I face this too. I've faced this in the past. Sometimes when I buy stock, I think to myself, am I buying it at the right point? What if it goes down the day after I buy it? Well, the fact of the matter is I look at it this way. If I weren't buying stocks, my money would be somewhere in bucket 1 or 2. And in buckets 1 or 2, I would be losing money. I would either be losing it through inflation, through my temptation to spend and just wasting it, or if I am spending, by buying stuff that breaks. It just breaks, or it's may break and be fixable, may break, be a complete loss. And so I think when people are thinking about investing, it's important to keep this holistic picture in mind. I think a lot of us forget that, myself included, but when one thinks in terms of this holistic picture, in my opinion, one can't really lose when investing. Surely one can lose if they have in my opinion, a buy low, sell high strategy, because if one is only buying low, selling high, they don't have the dividend component, just the capital appreciation component. It's a little more risky. It's more subject to market volatility, and we're in a really heated market now, and it's probably towards the top of the market. But when one is buying for dividends, one is averaging in over time, one is being prudent, responsible, buying for the long term, 10, 20, 30 years out. In my opinion, it's hard to lose with this kind of strategy, because the day that someone buys, the dividends start accumulating and they'll start coming in on a quarterly basis. Whereas when I look at buckets 1 or 2, I think a lot of people have the worldview that these are the only 2 buckets. They don't consider this third bucket. In my opinion, one is losing 100% of the time here. One is always losing. And so here, in my opinion, one is always winning. And so even if the market is volatile, even if I go in and the next day my stock is down 10 or 20%, look, every time I buy something, it's pretty much going to always end up being a complete loss in the long term. And so the fact of the matter is, I think that is very important perspective, and I think that people ought to be more holistic in their thinking just when looking at stocks and being scared about stocks, because if one is not in stocks, the alternatives are not very promising. And so one other thing, though, I do want to point out all the way back to bucket number 1 is there are certain things that I believe are worth spending on and I don't think are a loss. And there's a few I listed here. There's exceptions. One of them is books. Books, I spend money on books and I enjoy learning. And I think books also includes education. That's an investment. One is investing in their self. It's kind of like bucket 3, but for the human. The mind has to grow. The person has to grow. We all want to be on an upward ascendancy. And so investing money in books, in my opinion, that's never a complete loss. And so it doesn't really fall into this bucket. Another exception is the gym. Investing in one's health, investing in one's wellness. Good foods kind of accompany the gym as well. Healthy eating. Surely that costs money, maybe more money than a low cost meal or a junk food meal. Costs more money than not going to the gym, but again, that's an investment. That's investing in one's health and longevity, which I look at as more of a bucket 3 type of thing. Also, experiences. In life, in my opinion, the experiences are what matter. That's what you remember. That's what's enjoyable. It doesn't clutter up your house. It creates great memories in one's mind. And so that's another exception just from bucket 1 that I'll generally enjoy spending on experiences, and that is all good. I would say one other thing here when spending would just be charity, helping friends, gifting nice presents to friends and family. Those types of things I think are just joyous and add a lot of value and fun in this world. So those are kind of exceptions, and I think it's important to point out those exceptions. So just a fun video today, a really high level one for anyone who may be on the sidelines, maybe in the game even, thinking about investing or actively investing in dividends, but a little bit scared. This is how I have holistically grown to think about money, and it's helped me quite a bit in the stock market when I'm buying and holding forever, and I'm going through ups and downs that come with the stock market. Before I leave today, a disclosure. I personally own Clorox Company, ticker symbol CLX in my portfolio. I am long on Clorox. Also, a friendly disclaimer. Today's video is not investment advice. I am not a licensed investment advisor. Today's video is just for your fun and entertainment. If you are going to go out and invest money in the stock market or anywhere else, please do consult a licensed financial advisor first. Thank you so much for being here. Thank you for the support. This channel is growing quickly. I really thank you for the comments, the likes, the subscriptions. It means the world to me. Also, if you want to engage with me on Instagram, I'm over there answering questions. I'm on my phone, checking it throughout the day. Also, obviously, answering all of the questions or most of the questions that come through here. So thank you, and please keep them coming. Let's make this the best dividend community on YouTube and keep growing and supporting each other in our quest for passive income and cash flow. If you enjoyed the video today, once again, I would appreciate a like, thank you, and I will see you in the next dividend investing video.